Welcome to TradeTheMBI.com. This is Jonas. Report is for the 24th of July. Here we are right back at the ABM Yellow. Very nice, that reset of the steel, and it's about to cross potentially the cyan from a daily. That would be enough to push it towards the highs. We're getting just a subtle move from DOC green, which means midterm buyers, and we already had the pivot up of the red right at the negative 7.5 zone. So all the things necessary for some bullish behavior, but we're not getting orange below, so probably isn't going to last, at least not yet. We don't have that confirmation, and we already knew that it was more bullish from the NASDAQ standpoint, and you can see it's already pushed up against the highs from before. So again, tech outperforming slightly. The collapse of the euro, as we announced that Boris Johnson is getting his election, which means that Brexit is going forward, which means more trouble for the EU. What a shock. And like I said, I expected us to break below that range, and sure enough, it is. That could present some issues for U.S. stocks, because that weakening euro is definitely going to hurt European exchange rates. So that's going to affect U.S. earnings to some degree. It's not in crisis mode, but I think if you break below the 110, then I think you'll start to see the market react to that, because that will have a significantly negative impact. With that, we had the new budget deal, and the fact that that took place is putting a little bit of softness on bonds, because the borrowing that they're looking to do is staggering. So ideally, the U.S. would need lower interest rates to save hundreds of billions of dollars just in interest payments if they could get a move back towards what they were before. Interestingly enough, because that created a lot of the deficit that exists right now, was the rate increases since Donald Trump was elected, that arbitrary spike in rates that really wasn't necessary, but we already went over that for years. Oil, slight rebound. There's nothing happening. Everyone can see there's no interest from the Trump administration to create an escalation and conflict with Iran, so that isn't going to spike oil, which is why you've seen this decline. Nobody's surprised at that one at this particular point, and because of that, gold isn't really doing anything beyond. It's still elevated because there is systemic risk out there, and I think that's being factored into the equation. Plus, you're seeing a little bit of favor of the Bitcoins and electronic cryptos have suffered a little bit, and some of that's gone to the traditional metals. So from the day standpoint, we had that little dip that ended from the previous day, and we started out with nothing but a buy signal from above the 50%, and that led to the highs. We had a little bit of a retrace consolidation, and boom, and again, we saw that accumulation right around the 2988 algo level that we had before. We came in and popped up a few positive extremes starting at the beginning of this run. They filled back immediately, and then all the new ones that came in pretty much have just been filled by this little dip that's taken us slightly below the 50K. We've got a complete reset, and you're in a slight bullish configuration. You just need to see the orange completely dip down. I don't think this pop will probably last very long, and we'll probably come back to revisit the low area here, but overall, that's just going to be a rebound, and you get a complete reset from both shakeout as well as DOC. So that we're still hovering right around 3,000. We know that puts the next impetus back up at that, well, in this case, the 3008 range. I had between like 4 and 8, and then it'll be in the 3020 where we were before. So that's the long and the short of it. Anything special I will put up on the Skype chat, but it's been pretty clean action so far. As always, trade well. We'll talk to you later.